What's up, everybody? Dave Bartosiak here, and I have yet another chart of the day for you. I don't make fun of me. I know I'm bald. Okay, I get it, right? I get it. But we're talking about Hims. Yes, Hims. Hims and Hers Health. And no, I don't take pills for my baldness. I rock it with pride. I don't care. So Hims is a basically it's like a telehealth company here that has. Let me pull up my Epic pen. A telehealth company that offers consultations virtually, and then they go ahead and give you your hair pills or pills for ED or sort of other sort of health ancillary health issues. And it's been a pretty great business. I in the article I talk about this huge revenue growth that they have, and how the prospects looked so good, and they did, and that's why the stock rocked and rolled. So here you see a big boost pushes it over that 50-day moving average, and again, we're flirting with the 50 all the way up here, right? Even when you get these big rallies, you get reversion to the mean. Sometimes it overshoots. The market has a tendency to do that, right? We'll overshoot a little bit, but that's okay. Then you get another big move away from the 50, and then we're back at it, all right? And then the real test of a long-term strength of stock is what does it do at the 200-day? In this case, caught another bid, right? But look at the volatility here. I mean, these are big numbers. $26 in June, under 14 in September, over 30, and then in the blink of an eye, it's under 20. And what do I define the blink of an eye as? How about 3 days? 3 days going from over 30 to under 20. That is an incredible 33% move there. That is not for the faint of heart. So why did this happen? You may have heard of this company. That's right. Amazon decided to throw its hat in the ring and say, you know what? I like what Hims is doing over there. We can do the same thing. So instantly, overnight, you go from having a rock and a roll in time where you're the big name in the business to the bully on the block entering the fray. That's not good over the long run. Okay. Now you did get a little bounce, but let's put this bounce in perspective. So we're going to go from the highs here to the lows. And this should give you a little bit of agita if you are a long-term investor in this thing, because as the stock bounced from these lows, runs into a little resistance at 21.79, not surprising. Finds a bid at the 50-day, also not surprising. I mean, this is textbook. Runs into resistance at the 38.2, gets a little support at the 23.6, but this last bit about the resistance being at that 38.2, that's the bad news for the long-term investors here, right? Is that supply came back on there, and now you've got targets to the downside, probably at that 200-day, which right now sits at 17.27 for a stock that's up at 22.60. So the folks who love shorting stocks are licking their chops right now because it's a pretty good entry on a swing trade. You could just go ahead and park your stop up over just past the 38.2. So let's say you put it up at 24 and change, maybe 24.02, right? With targets down at the lows. That's something that Jeremy Mullen does a lot here in his Counter-Strike service, although it's usually inverted, right? He's usually buying stocks at pullbacks versus shorting stocks on when they rally back up. But still, same formula, okay? So that's not good in the intermediate term. I know I saw some comments and emails when we were talking about Supermicro, about how they hate the shorts, burn the shorts. I get it. There's a lot of vitriol out there for the shorts, but in terms of the technical setup right here, this is definitely setting up, unfortunately, to be a short. Okay. And let's look. I want to show, how some of these moves lower have gone already, before you had a giant like Amazon entering the fray, right? So you have this first move from these October lows up to these highs. And look at that, 50%. Which happens to be the bottom of that gap. That's pretty good. And then, like I've shown you guys before, how we put targets on this. So again, this is just I'm on Zacks.com. If you go to the interactive charts page, pop that out. That's all I did here. And then drawing that fib, we can go ahead and pick different coordinates for this. And that will give us these extensions above the level, right? So these are retracements coming back down this way, but then extension gives you a target in the opposite direction, right? So in this case, the easy way to do this extension is, let's just call it, I don't know if I want to use that color. Let's use that color. That's fine. We're going to call it negative. Oh, not number 3. Negative 0.382. Right? I'm just going to do that one, just to give you an example. Boom. And there you go. That gives you one of those extensions, right? That first extension, the 38.2. Jeremy often does that 23.6, which we can pull up too. And then you can put the 50 on it. Let's go ahead and put the 50 on it also. So let's go to this one. And for some weird reason, I think you guys saw as I was doing this, you have to put 0 point, okay? Which is fine. 0.5. Boom. Now we have that one too. Although I totally screwed up the color on all of this. That's okay. You can go back and fix this and make it look pretty. So there you go. But what I want to do here is I want to use the same format now that I have. And we're going to go back to that place that we were going. We're going from the highs to the lows. And this is a little bit uglier. Something overlaid another one, but that's fine. Just gives you a target 1482. That's well past that 200-day moving average on this. So I wouldn't worry so much about that. Anywho, long-term shareholders, you've really got to worry about the 200-day, right? When it gets there, what's going to happen? If it's going to get there. Now, remember, this is sort of a consolidation period, though, too. So, yes, you got that big spike up, but obviously there weren't enough buyers to carry on the momentum. Maybe there would have been enough buyers to carry on the momentum had it not been for that bad news event, right? So now this is your ceiling, effectively. 26 is going to be a pretty hard ceiling to get through. But for the most part, it looks like this is the range. So the stock wants to be in this range right now. But I'd be, it gets through the bottom end of that range. That 200-day happens in a hurry. We already saw the fib set up on that. I'd be a little worried. Now, if I'm a long-term investor and I do want to add to this, a little bit of patience, right? Although it does feel like, hey, it's on sale. This thing was $30. Now it's only 22. I think there is some downside risk for that. So just be careful. Now, listen, just because Amazon has entered the fray doesn't mean that Hims is doomed. And I want to hammer that home, right? Doesn't mean it. Pretty sure there was a Burger King before McDonald's came through. What I'm saying is there's usually room for more than one competitor in this space, but maybe it's just going to temper the expectations on a stock like this. So what's going to happen if I look at my crystal ball is that next quarter's earnings report for Hims is going to be monumental because they have to show, do we still maintain the momentum that we did before Amazon entered into this? Their guidance is going to tell a lot. Are they going to be overly cautious? Is it going to be good? Is it going to be bad? It's going to be huge. So that next earnings report is something you need to circle on your calendar because it is going to be big time in terms of the intermediate direction or even the long-term direction of this stock. So there's a lot at stake. Doesn't mean that it's all over, but it does mean in the short term, the market has a lot of technical pressure and there is a ton of risk. All right, folks, there you have it. That's what I got for my chart of the day. Be sure to follow the author here on Zacks.com. Don't forget to subscribe to the YouTube channel so you can check out all of these videos as they come out. And yes, it is a bit of a misnomer. I call it a chart of the day, but we only do it a few days a week, but couldn't call it a chart of a week because we do it more than once a week. So you're going to have to just stick with it. So I'll see you guys after the weekend. See you on Tuesday. Thank you so much and have a good one.